Hello, welcome to episode 17 of Learn TA with Landy. Landy, how are you today, sir?
I'm doing well, Peace. It is great to see your beautiful face. I am enjoying the market and the price action right now. I hope that you are too. And we got a few things to discuss today, as denoted by the title here. We're going to be talking about confluence and confirmation and kind of evaluate where things are at with everything that we've discussed thus far.
Sounds good to me, man. I am very excited to, I really do feel like I have more of an understanding or an expectation of I can feel better about when I'm looking at the markets, what I think is likely going to happen, or where I think we're going to need to, what needs to happen before X and Y can happen, kind of thing. Yeah. So I've really been getting a lot out of this, and I'm looking forward to seeing what we have today.
Yeah, man, it's going to be a fun one. We can just jump right into it, because this is, it's just a discussion about kind of where things are and where we might be headed and what we want to look for in terms of the confluences between different time frames relative to our previous conversations. And I am drawing this out a little bit while people come in. Let's see here. Let's see. I'm also sharing this out. Let's see. Yeah. So
much appreciated, as always. And those watching too, when you do watch this, it's actually really very, very helpful for us if you share it out. This is good information. Anyone that's even just kind of interested in what might be going on with Bitcoin and isn't really familiar, you're going to get some good information as to how to just look at the chart and maybe get an idea of what might be going on. So it's really good information to share with your friends.
Yeah, I think that this is going to be an interesting one, because we're at an interesting inflection point for Bitcoin, Ethereum, Solana, Stacks, wherever you're looking. We're at some pretty big inflection points, and even traditional markets. So today is going to be a little bit less about like, hey, let's evaluate where price is in the context of what we've learned, but more about where do we find the confluences, and what is the confirmation that we're looking for, in this case, a shift from a bearish trend to a bullish trend. And we can start right with the daily here on Bitcoin, and we can see Bitcoin coming off of the lows has now moved up and gotten above this area of resistance where it had failed. So we've been in a downtrend this entire time, right? And in this case, the downtrend really started on the 30th of January, is really where we had a failure at the highs, spiked the close opens at 106 or slightly above, failed to close above there, closed that lower high after putting in a lower low swing. This was kind of our danger point, right? And when we've talked about trend previously, looking at like, okay, we were in this uptrend off of a nice low that was set at $89,000. We went in to make a new all-time high on a very odd candle. This was an inverted doji, some are going to call it an inverted hammer. It's not really a hammer. It's really just an inverted doji. If we're looking at candlestick patterns, which we are going to go back and revisit trend, support, resistance, volatility, and momentum again, and review these things with the knowledge that we have after all of these episodes, and start to get more into the actual technicals of like candle structure. What does the candle mean? What happened during that auction? That kind of stuff. But we failed to close above the prior all-time high while making a new all-time high, right? That was the first kind of warning. Came up, got that close open right at the all-time high, came down and made a lower low relative to the last higher low that it had just put in. That was the warning right there. Then on the next move up, we need to start seeing closes back above 106 and then proceed to close above 109 and a half or so to get continuation to the upside. We didn't see that. We saw a lower high and then consolidation that broke down from a key level that we've talked about prior to new lows, right? And then we've come in for a front run of the consolidation from last year on the high side structure here. And right now what we're looking for is, okay, we've got this downtrend that is now, broken on a close, essentially, at least for the most recent highs, got that nice break on Monday. And now we're pushing up. Well, where are we pushing up to? We're pushing up to resistance. And if we just look left, we can identify, the prior compression to expansion up from the previous range. So we had the highs get spiked. We come down for a higher low coming into election day and then immediately rocket up in an expansive fashion. And that's where we can look and go, okay, well, if we're looking left from where price is, what lows do we have to recover, right? And the closing, we first look at the wicks, right? Or these swings. And we have this series of swings, and then we have even this, higher low structure. We have the bearish candle down here. We have this higher low structure over here. So we have the expansion, the little bit of consolidation. We see this beautiful higher low coming in right here before pushing on to continue to make new all-time highs, right? So this area right here is our kind of our red zone. It's kind of the bottom side because this was a nice swing high to swing higher low to a high that was put in on a higher low again. So we have the consolidation and then we get a clear structural higher low on a close, right? So when we start looking over to the right, when this structure started to fail, we saw the compression here, the big expansion down that broke this common area for all these swings. And we can even get a nice common area. Well, where were we not closing in for all these swings? It was right here on the next higher low relative to this higher low. So we have the initial big push up. We have a consolidation sideways, nice little swing structure to a nice swing higher low and closing higher low. We make a higher high, higher low. We get a big old doji, come down, make a higher low, higher high, right? And then we saw that all of these swings, no closures, were coming in below this close open higher low here. Some would even take the swing low. I like the close open here because it's confluent with this consolidation high side structure, right? So if we were to just shoot a horizontal line across here, we can see that we have the structural kind of closes right in here, right around where this swing low is. And in particular, we have a nice close open that we swung above, put in a higher low, and then moved up. And we've, even at the time, I identified this as the low to this swing low to incorporate this wick so that there's a zone of interest. And that's personal to you. To me, I liked just the look of this particular close open right there. How it was relative to lining up with the swing structure right here for this high, right? Not necessarily this wick, although we did see a nice higher low swing come in here. We saw a front run of it here, so on and so forth. But it was more about this close open here and how this swing came into it, closed above it, right? And we see the close open came in right on this high that led to this higher low. Does that make sense?
Yes. Makes a lot of sense. Also kind of, so just one thing that we maybe don't always touch on is what this is actually giving us is a visualization of actually what the price action in the market has been, where we wicked up to that price. What the market wasn't quite comfortable there. Then we ripped higher, but it had to test back down.
Yep.
It tested back down right to that same number that it had wicked up to before, because that's already been set psychologically by the market. So
yeah, because this was the actual swing high. Yep.
So and that's a number that the market's kind of searching for more or less. It doesn't have to always be on that number, but when it lines up, it makes sense.
Yes. And so one of the nice things about Bitcoin is Bitcoin trades really clean. It's probably the cleanest asset that I've ever traded in my life. And that's going back to even some of the early days. And in this case, what we had was this nice higher high that was set here. We had the swing high was higher, right? But where we
Real
saw the
quick, I
closing
actually
high
want to
get
just
set.
shout out XY0, Zero Authority. What's up, brother? And Mr. Wagney, how you doing, man? A couple of OGs in the live chat saying hi.
Oh, nice. What's up, guys? Yeah, I'm not. I didn't even have. How did the chat get closed on my restream side? That's weird. Yeah, and shout out to those that have been sharing it in the different groups. I saw Examiner and a few others as well. Thank you guys. I appreciate it. One of the big things about this piece that you'll often hear is like, okay, we came down, we found some support. Guess where that support came in? Right at the first close open where the bearish candle came in. So post expansion, here's the beautiful part about this. So this little downside move was still in the prior range here, right? So what we're looking for now, right, is back then we were looking for, we'll say this is a green line above here, right? And we saw the highs get tested, but no breakout. We come back down, get that nice compression, and then blast off, right? Well, the first bearish candle post expansion, this is how beautiful Bitcoin is, by the way. First bearish candle post expansion has been a local area. If you watch my videos, it's been a local pivot for the range that Bitcoin has been trading in for the past month or so, right? But look at this close open. This close open came in. Where did the higher low on the swing come in? Right there on the close open. And then we get the big push up and we come back and we retest for demand. So this is known as an SR flip. So this was resistance. We then put in a nice higher low. We move up. We come back and retest this as support. And the close open comes right in on the swings here. This was defining now the entire range low structure of this consolidation at the highs, right? And once we got the first close in there, well, we got the first close in there right on this nice swing. People were bidding off of this swing, but it was really a big range. And then we see a test up, a failure on the next candle here in the lower term timeframes. And then it comes down and it closes just slightly below this swing low right here. And then just comes down for new lower lows. We even got a nice retest. If you look here, this was on a Sunday, right? Now we were gonna bounce. Now it was a matter of how exacerbated the move. It was like, okay, were we gonna retest the red zone? It looked highly likely. We got some posts by the president of the United States that were pretty pro crypto that exacerbated the move, but look where it stopped, right at the bottom side of this consolidation here. And that was the consolidation prior to moving to new lows, right? So now we have a good picture of like what is overhead as we head back up to it, right? And as we kind of construct this picture, we see that Bitcoin had previously, it went up to 95, retested that consolidation. We even see the squeeze in Bollinger Band volatility and then boom down, right? Nice mean revert right back to retest and then right back down, higher lows. Where does it fail? A nice little swing above to 92.8, but failed right in the red zone. So it found this area as resistance that was prior support. This was clear, not just a rejection, but a nice higher low into actual confirmation that this was no longer support. Now it is resistance. You can call it supply at this point. Some people will call the support demand. In this case, it was supply or resistance. And then new lows. Where did it come back to and test? 88,700, that higher low again. Comes down, tries to hold itself together. Comes down, spikes back up, no go, even gets front run, new lows. We now start working our way back up. We get a nice little equal high close, little higher high swings while still remaining below that 88.8, 88.7. But we get a nice consolidation sideways in the bullish half of the bands here. We knew at that point, hey, if this breaks out anywhere above 86.5, this is going to go up and retest these highs here. That was pretty much where I was on lower term timeframes. We saw the nice test up on the Monday candle. And now here we are on Tuesday, and we are actually filling out this area of support and finding lower term timeframe demand in here. We're not immediately getting rejected, which is a positive sign for the bulls, but this is right in the thick of resistance. So we still, even though it's nice and bullish and it's a nice up candle, we're above these prior highs. We have to exercise caution until we see closes above this zone that can be considered resistance and supply, right? And we can even, refine that down to individual candles in the range. But realistically, I'm looking for a reclaim of 89 on the weekly, which is the weekly higher low. That's this one over here. We're on a daily chart, but this is the weekly, right? And then we need to see daily closes above 92. That would look really good. Now we can refine things a little bit further, right? And so right now what we're doing is we're setting conditions, and then we're gonna look for confluence here. But we also see that there's the basis band right here at $92,000. Now, some of you might remember, and we're going to get really deep into at some point, moving averages. We have touched on it before, but this is a 20 simple moving average. It's just taking the average closing price, looking 20 candles back, and saying this is where that average closing price is. Essentially, there's some more nuance to it, whether you're using SMAs, EMAs, so on and so forth. But in this case, we see that the weekly basis band is right here at that 92. This is important because if we see the daily start to break above here, that is encouraging for the weekly. There's also a few other things that are happening here. If we were to take some structural implications here for what's going on, we have the big move up. Right? We have a weekly higher low, we have a higher high, and now we have a lower low, we have a lower high, and a lower low, right? So if you look here, right on this line, essentially right at around 89K, we have a higher low. We do have a higher high, lower high close. That was the danger. Remember me calling that one out? I was like, uh-oh, that's not good. But it was this nice higher low right here. Also happens to be where this lower high came in. And we have a downtrend, right? We have a lower low and a lower high. And what we're looking at for conditions is a break of this lower high and a reclaim of this higher low, which could occur all at the same time. That would be a break of structure. So that would be breaking this downtrend. So now we have higher highs. What is the next thing that we look for? Higher low, equal low structure. Otherwise, this becomes a deviation of trend, meaning that it's a higher high, but if we go and we make lower lows and just get continuation to the downside, then we've deviated the downtrend with that higher high, and then we just continue on with lower lows. But you have to give it a chance. If we see closes above 89 here and a reclaim of this higher low swing, and we see, a trend break plus a reclaim, plus in this case for a weekly, setting a higher, setting the low on a close, not a higher low, a lower low on a close. So we need to see the lower low set. For me, that criteria is 88.8, or you can just call it 89. They're already calling out this as a higher low. I have different conditions for that. Technically, last week's candle, the Sunday closure did set a low on a close. I would argue that it's 86K needed to be beat for a technical low to be set on a closing basis, but that's just splitting hairs. It really doesn't matter. At the end of the day, I want to see the low set on closes above 89, essentially. A reclaim of this. That's also a break of the downtrend while setting a low and recovering an area of interest, recovering a higher low. So you have three confluences all at the same time. We would get a low set, a break of trend, and a recovery of a higher low. So those are the three confluences that I'm looking for. And the condition is closes above $89,000. We'll do it. That still doesn't get Bitcoin out of the woods on the daily, though, right? So now we look for additional confluences.
This is on the weekly. So we still have a long ways to go to close above 89 on Sunday.
Yes, we do. And that's where, it pays to be cautiously optimistic for the bulls here. I said it on my video yesterday. I'm swing long from the lows, specifically on the daily. I pointed out that I've been swing long since this retest of the lower low, because when it got there, we were getting bullish divergences everywhere. We were getting mean reversion signals everywhere. I was comfortable taking a swing long position, even if it dipped a little bit lower. I was ready to build that position out even further on the swing long side of things. Now I took profits, and I even opened a short position at the resistance here. That short position ended. I did take some profits on that short position in really low term timeframes, but I got stopped out. So it wasn't about I'm still swing long, but I got stopped out of that short position because it was a hedge. We're at resistance. It only made sense to take a scalp hedge. I took a little bit of profit on it and then got stopped out a little while later. I'm okay with that. Now that's when we get into like trading strategy and stuff like that. I'll talk in more detail about that. But realistically, we now know the conditions that we want to see for the bulls, right? Closes above 89, set the low on a closing basis, in the way that I'm evaluating in a more conservative way for price. And that might be, you might want to front run it. Maybe you're more aggressive than I am. And that's okay. Maybe you're taking the signal on the close Sunday as like, nope, that's the low set. So set the low, which will be a lower low, break the downtrend on closes above 89, and reclaim a higher low on the weekly. So those are the first three confluences that I'm looking for conditions to be met, right? Those would be fairly bullish, not inherently bullish, but fairly bullish. The other thing that I'm going to be looking at then is, okay, where is RSI? Are we getting divergence? Now, this indicator isn't going to show you the divergence, but this low on this low right here on RSI is from the initial move back here off of 54,800, almost 54.9. Right? So that's where RSI was there. We see that we're in higher low territory. And if we look at where we are for RSI, we're lower than that. So when you're looking for divergence, RSI is relative strength index. What we're seeing is a lower low in relative strength with a higher low for Bitcoin on price action. That is a divergence. In this case, this is known as a hidden bullish divergence. And this is stuff that we're really going to dig into. But right now, this particular indicator is calling the low set. And there is a drive of hidden bullish divergence. It's just not populating because I don't have the look back set very high right now. Meaning that I don't have it looking back as far as September 2nd at this particular moment. If I did increase the look back, you would see a blue line here indicating bullish divergence. So there's some confluence, but this is still counter trend, right? We haven't broke 89K yet on a close. We're definitely swung higher, right? So that's good. It would be a higher high on a swing, but I want to see closes above it. And then the next thing is momentum. Well, we talked about trend, right? So we're still in a downtrend. We have now broken, as of today, the swing lower high at 88.7, and we have in lower term timeframes reclaimed 89K. So those are all good things intra week, but we want to see those closes get follow through, right? The next thing that we pointed out is on the Bollinger Bands, 92K is where the basis is. And then so we've got trend. We're looking for a downtrend break. We have that on a swing. Need to see it on a close. We have support and resistance. We just looked at 89 to 92 as the main overhead area of interest right now. There is further on the daily, but right now we identified 89 to 92 essentially. And then we have our basis band is where volatility is. That's where the 20 simple is. And now we have the momentum. So the first three create the fourth, right? So trend, support and resistance, and volatility create momentum. but never take one signal over another. They have to be confluent. They have to agree. Here on the weekly, we have a counter trend signal that has populated, and that is a full turn and confirmation of, you can think about it like, I like the way that Eric Crown from Crown's Crypto Cave, I think it's Eric Crown Crypto now, he explains it as, you can think about it like pressure. It is a counter trend signal as it stands right now because weekly isn't a downtrend, but this is, we have that divergence back here between, where we are now, setting this low, hopefully through the weekend, also breaking the downtrend on a close, all the way back from 58K. And if you look here, we also have a divergence on our momentum indicator between these 2 points as well, from the last major low to this low that's looking to be completed, right? And we can see it's coming off of a very deep level. So we have a big momentum divergence, and we need to see that trend break. We need to see that low set. And then that's confirmation that we're going to be hunting higher from the weekly, even if price falls, as long as it doesn't fall below $82,800, $83,000 on the weekly. So we're a fair distance away from that. Now we have our conditions and we have our confluences. If we're closing on the weekly above 83K by the end of the week, pressure up. If we break the downtrend on closes above $89,000, we already have a higher high no matter what, but we want to see that recovery of the higher low. We want to see the low set, and we want to see $89,000 break on a close, plus the divergences that we see in RSI and stochastic momentum point to price trading higher, and then giving us that potential look where we have a downtrend right now. And what would we want to see? No matter where this runs to, we want to see higher low equal low structure develop from here. So essentially what we want to see is we want to see this now get its downtrend break, right? And we want to see, let's say this is let's say it tops out right here, right? What do we want to see from here? We got this, we'll make it green. We want to see what would we want to see if we're bullish? If we got a higher high, what do we want to see from higher low or equal low? So that's where, yeah, higher or equal.
To get close to equal. I actually would prefer a higher low.
Yeah, me too. As a bull, I would. Yeah. So we're looking for higher low equal low structure that then breaks, wherever this high comes in. And this is just hypothetical. I'm just drawing an example here. But equal lows are acceptable as well, right? That's still fine. But now we have to be aware of higher low equal low structure. That does mean that there's going to be opportunity that presents itself. So essentially, it doesn't even matter if this thing comes all the way back up and makes a new all-time high. I'm not sweating it. There's a lot of people are going to get FOMO. And then when it does this, then they're going to be, oh my God, it's all over.
Right. It can still be an equal low at that point. And
then you have even more room if it was to shoot all the way back to its highs for a higher low equal low structure, right? It's just got a lot of work to do. Now it doesn't matter. So essentially what I'm saying is, as long as it's a higher high swing, I do want to see higher low closes though. I don't want to see closes back below 89. That would be bearish, but we still would have to be aware of higher low equal lows. I just wouldn't want it so compressed around where price is right now, but I can do something like this, right? Come up to 92, 95, maybe right here where where the big Trump candles were, and then try to form up, because this is now going to be solidified as a base of interest, right? Between this close open low and these highs over here as a big zone of interest, right? Because we found demand in here that even front run these highs over here. So, we are just looking for higher low equal low structure wherever that comes in after we see a weekly high put in. And we're not there yet. Okay, we're not there yet. Right now, we're on higher high swings for the weekly. We need to see the closes. At minimum, I don't care how bullish you are or how bearish you are, minimum closes for bulls need to come in above the 88.8 preferably above 89, recovering that swing higher low. Then things are looking, we're looking at a really bullish setup that could emerge potentially from there. And then we have to find those confluences on the lower term timeframes relative to the weekly. And things are right in the thick of it right now. So I'll give you, if you want to, I know you've got somewhere to be here in a minute, but if you had any questions that I can wrap up in short order, let me know.
I just got a DM from Nick, and I don't think he has a question about the show, but he just messaged me, "Hey, I have a question." So I'm not sure. Let me actually, like, literally, like, right now. I don't have a. Let me. So I guess I don't have any questions. It's really just a matter of still wait and see. It doesn't look like we're in a bad position. I mean, we're in a better shape than if it was not at least wicked higher, right? We got a higher wick high, or a higher swing high.
Yeah, even if we get a higher wick or a higher swing, it would be a higher high, right?
Right.
From a swing basis, showing that price can break through. But the danger is closes back below $88,800, $89,000 for the weekly would look like this is kind of a rejection. What's up, GP?
Hey, what's up?
And this is where things would get dicey, right? Because it's so close to the current structure on the lows, right? And it's still in the bearish half of the bands. So that's where things, for the weekly in particular. So obviously I'm taking and just tracking the daily, and we're looking for, this to get continuation to the upside. Examiner asked a question.
Oh, I missed it. Cool. Yep. Does Landy think BTC has depegged from TradFi, bringing this up because of price action yesterday, which it definitely wasn't correlated yesterday.
No, definitely wasn't correlated yesterday. But if we were to take and add like NQ real quick here, and we'll go with we want to do, what do we want to do? Which should we do? SPX? Let's do SPX instead. SPX might be easier because SPX has been kind of, or we can just do SPY. SPY might be easier. Where do we want to go? We'll go to, why am I not getting my indexes? What am I doing here? What is going on? No, I don't want a short volume. We'll just do the trust. We're just going to do the trust for right now. And of course, I'm having all kinds of trouble today. But let's see. Hey, GP, are you hanging out for a show, or you just want to come on and say hi? I miss you, brother.
Yeah, I'm coming on for a show. If peace got a dip, man, the TA's got to be taught, right?
Well, I gotta listen. I do. I have about 8 minutes, and I have to drop. But if you guys want to keep it going, GP can
man,
lead it.
I'm here until 3.
Oh, nice. Here's my argument for what SPY was doing versus Bitcoin. I think Bitcoin was front running what traditional markets were doing, right? So we did see them fall in tandem, and we have seen a bit of a rise from here. But realistically, what happened first? SPY was up here, still trading in its range. Let's go ahead and actually turn this into a line chart real quick. Because I'm not a decoupling guy. I don't think we've decoupled yet. You're going to see some confluences and some divergences. So you're going to see like SPY was up on its highs and hung on its highs while Bitcoin broke its range lows, right? And you can even extend this down to this guy here, right? If you want, from a line chart perspective. Bitcoin is the white line here. It broke down first, and while SPY was still in its range by its highs, it spiked up and failed, and then shortly after they both ran and ran down. SPY recovered, Bitcoin recovered, SPY nuked, while Bitcoin has diverged. Could this be, the quote unquote decoupling stuff or decoupling event, Bitcoin showing relative strength? I think that Bitcoin is showing what we're potentially going to see in TradFi. Why do I say that? Because it dumped off first. It's not a huge part of portfolios for a lot of players, right? So it dumped off first, SPY followed. It's now being bought back up first. What do we see with SPY? SPY trying to set a higher low. In this case, and it might be a little bit because our faces are in the way there. There we go. Got it. But that's kind of where I fall on that. I think that we'll get these correlations and decorrelations, and over time, Bitcoin will definitely become an uncorrelated asset with these markets. I think over time, Bitcoin is going to make its circulating supply, its dwindling circulating supply with increased demand and lowered emissions rate over time known in its price action by actually decoupling. I think that that's a great narrative when it does happen for, a week or two, but I don't think it stands for more than a week or two. I think that it's going to be, another cycle or two before we see Bitcoin fully on its own. Maybe it happens this cycle. Maybe it happens with accumulation by states and the Treasury in the United States and other countries working with Binance. Maybe we see it. Maybe this is the etchings of it, but I'm not convinced just yet. Much love, peace. I appreciate you, brother. And GP will feel it. I miss you guys, man. And
we miss you too, man. I know you've been super busy. We all have been. There's so much going on in our space, and it's different now. Like, I just don't have time to follow people into their spaces anymore like I was, because I got too much going on myself, and I know everyone else. It's a great thing going on because it shows that we're actually, the ecosystem's maturing, the community's getting more ingrained into the processes and everything that's going on. But yeah, man, it's been
you guys have been
busy
grinding, and I love it. Like, you guys have been having a lot of success. So I've been watching. I've also been grinding, and we'll have some stuff that we're going to learn about soon. And shout out to Examiner. That's a great question, by the way. I was on, I think, Wolf's space the other day talking about this with a few. This is like, there's some people that believe we might be seeing the start of it. I think that we need to see accumulation by states and governments. I don't think that just the asset under managers, because they'll roll their liquidity and their portfolio over and then roll it right back. Right. So they're
not going to give us sustainable growth.
I mean, they will, Bitcoin being the preferred, but it's such a small piece of their portfolios for their clients that they're managing.
Well, it's just not as much buy and hold.
Yeah.
Their clients buy and hold more once the municipalities and the states and all, they all start actually accumulating it. Then the retail will want, like the bigger retail are going to want to get it more. So
exactly.
It's
going to be Bitcoin and then Ethereum.
Right. Ethereum is probably a great buy right now. Not financial advice, but I mean, $1,600.
I've been buying it below 2K. It hit my levels, hit my 15, and nearly hit my 1369. Nice. Gotta have the meme numbers. Nearly hit it. Front run it. Almost got my fill there. So I actually marketed in for the first time, and I don't know. I don't think I've marketed in years at this point, but I marketed in on that because it was right in a big zone of support. Look, ETH's got some building out to do of structure to be healthy for price structure, but yeah, it's not going anywhere. Neither is Solana. I know that the two communities are kind of at each other's throats a lot lately, but
if I was in Solana more than I am now, I'd be just happy with it still hanging out over 120, 130 bucks during this correction.
Yeah.
I think that they're doing very well. They have no reason to be upset. I don't think that they
season
have the
hasn't even
same
come.
momentum that they could have. I think that a lot of that, pump fund stuff really kind of almost overheated them too much to some degree, but they're still doing great. So
Yeah. And
I'm gonna jump, but I'm happy to let you guys keep going as long as you'll
Sure.
take it. I don't want to. I'm not. GP. As long as you guys are ready to go, I do have to bow out. I have some stuff I have to attend to momentarily, but I will catch you guys around soon. Have an awesome Art on Stacks. I don't know if I'll actually get a chance to tune in or not, but I got a bunch of bullshit I got to deal with, so I will catch you guys later. And I love you guys. You all have a blessed day. And
Love
thank
you,
you
Peace.
for
Thank you,
tuning
brother.
in, Examiner, for the questions. Great stuff. And everyone that said hi. I'll talk to you guys soon. And I'm going to leave it running.
All right.
Awesome.
Thanks, Peace. Appreciate you, brother.
Like I got out of school early kind of thing.
You right? You got out of class early?
Yeah. Great. Thank you, guys.
Take care, bud. So GP, it's been a while, brother. It's good to see you, and thank you to Peace. We're gonna keep this going for a minute because we might as well go take a look at traditional markets.
Yeah.
Hot topic is kind of what's going on and what could potentially happen in the future. One of the big things is everything that we've been since day one, episode 1 of Learn TA with Landy here with Peace. We talked about trend. This is still a downtrend on Dow. It's still a downtrend on NASDAQ, right? Still a downtrend. On SPX, still a downtrend, right? But what do we see right now that could be forming, right? And GP, you've got a little bit of technical analysis chops. I know that for sure. I've seen it.
Yeah.
I've seen it. You know what could potentially be forming here, right? So we've got a nice little try to break out. We've got a nice little lower high to lower low. We got this lower high. Pretty much that's a downtrend, but what could we potentially see here? So we've got this downtrend. What are we looking for?
Are we looking for a double bottom? Are we looking for a bearish, maybe some bear div?
Well, not necessarily a bear div, although that could form on the other side of this, but we have a potential bullish divergence forming here. From the range up here, from right where we got the breakdown. And Examiner said, yep, higher low or equal low, right? Because we saw we got this breakdown, right? And then we came back up and retested it right here. Now, could there be bearish divergence building on the other side of anything that does higher highs? Absolutely. Continuation drives, otherwise known as hidden bearish divergences, will be in play, but we have the potential to set a higher low today. Now, it's not the strongest higher low. Could turn around and turn right back into a lower high, but what this does, if we close here on SPX, so if we close here on SPY, essentially, what are we looking for? We're looking for a bullish divergence to form, and a big one at that, because we're getting significantly, now this can work against price in terms of momentum and stuff and relative strength, but if we get a bullish divergence, now we're starting to see bullish divergence form within this low structure, and it's from this low up here to this low here, which is a pretty big divergence. Now, relative to setting bullish divergence off of this low, that means that we would need to see lower lows, right? So we would need to see lower lows in order to set any kind of bullish divergence between this low or off of this low. So if you're bullish, you're looking at this as a good area to try and test back up, right? Between this low and this low. Otherwise, to form a bullish divergence, we need to see lower lows than this low over here, right?
Right.
And that's where we would very, very highly likely get a divergence off of, this low, unless it just nuked all the way through and we're all going to zero and SPY's done and
Yeah,
let's pack it all in. But that's, highly unlikely. So as it stands right now, we're looking at the potential for this higher low to at least show some bullish divergence signs that realistically, from an analysis point of view, just looking at the candlestick chart here, targets right back to the local highs here, right where the breakdown was, right where the retest came in, that kind of stuff. So we're probably looking around 5,500 to 5,440. Or if you're just using the trust, it's 540 to 550 essentially. But we need to see a recovery of these lows, right? And we can even move this. We can even move this down a little bit. This was just me kind of taking the first move to the second move down.
Right.
One of the big things that I've been doing is going back to the last time that we had tariffs. Now, there was 2 times before this that we've had tariffs as a narrative. One time we know about very, very well, and a lot of people don't know about the other. 2018 in traditional markets. So Confluence, this goes to Confluence and conditions as well. We need to see close back above 5,500, right, for SPY. That would look like a good reclaim, but still bearish below essentially 5,700 here. So there's kind of a zone of interest to be aware of there. And that's all just structural stuff, simple stuff we've spent tons of time talking about. And then we could see, even if it chopped around for a while, very highly likely that this is a major low that turns into a macro low, right? So what we're looking for here, though, is when is the last time that we had tariff narratives? Well, there was actually 2 times that we've seen even recently. We might remember that this was not tariffs. This was 2021 into the 2022 bear market. Of course, that was a liquidity crunch. We have no tariffs here. Oh, wait, here's some tariffs. 2018, fourth quarter of 2018. And now you see the bumps in the road in early January of 18, right? So it's 2017. Crypto was not following traditional markets at that point, right? We saw brand new highs coming into 18, the end of 18. We saw a big old correction coming off of all-time highs in 18. Trump had indicated that he was going to do tariffs around here. Market recovered fairly quickly. It took very, very short order to find the lows. Came up, higher lows, equal highs, came down, tested those lows again, then chopped its way in an uptrend all the way back to new all-time high before implementation. And it took 65 days, or it took 65 bars here, or 96 days to find the low. And then it was right back to new all-time highs. A little bit of structural changes, but continued to make new all-time highs coming into the big old March crash, which only took around 30 days to find the low for SPY. We, of course, get the Fed change in terms of policy. We get inflation that needs to be fought, and then we get tightening. Liquidity dries up, market goes down. It took quite a long time. It took about 282 bars to find that low and then recover throughout the rest of 2022 into 2023 to make a new all-time high. And then we got a bit of a correction here. This was a pretty big correction. This was there was some important things going on in 2023, but was not talked about in the media. But there was some talk about Taiwan. There was some talk about potentially putting tariffs on China, and that scared the markets. We got a big old dip in the end of 23 into 24, and then in May, we had March, April, May. We had tariffs from the Biden administration come on board. And then they were going to be implemented, and when they were going to start their implementation was July. So the fact sheets and everything else went out in May. And then into June and July of 24, we had some soft implementation of those tariffs, and we saw a big old correction. Now, my point about this isn't about do you agree with tariffs or do you not? It's how long did it take to find the actual low? Because it wasn't really, it was for those that were heavily invested in China and the CHIPS Act and like all this other stuff. This was a little bit of a scary time, right? In terms of where are we going to go with our money at this point. But it took about 22 bars to find the low on the first initial wave of news. And then about 20 days to find the low there. We didn't really see enforcement of these particular tariffs, though. So the market just marched on and on and on. Now we get to the point where we start to get into February, talk of tariffs again. We get a big 10% correction, just about a 10% correction during implementation. We had about a 8.5 to 9% on this one. But because we have a common president that is talking about tariffs, 5% actually. Here's the 10%. This was the original talks about Taiwan, chips. Should we be going after China in terms of trying to protect our interests and stuff like that with tariffs? And they were going to be scaled tariffs over time. We saw the 10%. And then we had, tariff talk, new president, market dumps 10%. Market dumps the other 11% or 10.5% out upon implementation. So far, we're about 47 days from the all-time high to the low here. So the hope is that the over-leveraged players in the market are now reallocating to find their entry with the changing environment, right? Because we have to pull our investment back, go cash. You have a lot of forced selling for maintenance margin reasons from prop shops and hedge funds and stuff like that. But they're going to come back into the market. Now they're evaluating where in the market do they come back to, considering the tariffs, right? Because they're not just going to sit on the sidelines and not make money, right? That's not how things work. And if we were to go back and look at history for Confluence purposes, back here in 18, it was that 96 days. It was a 20% correction upon implementation at the end of 18. It was about a quarter to recover for traditional markets. And earlier that year, we saw it was about a 10%, I believe, somewhere around there. So we get very similar things when looking at price action. This isn't an indictment on any president or what they're doing or how they're handling it. This is looking at market participants and what their take is. This is about an 11.84%. This is a big correction upon just kind of proposing the tariffs in Trump's first term. And we saw that crypto didn't hold up very well. Crypto went into a deep bear market in 2018, right? 2017 was the high. January was to 18. And it was like December to January, boom, down, right? And then consolidation and then down again. Well, traditional markets bottomed out at their lows and just went and marched right back on. And it wasn't until the big move down here, end of 18, that we started to see crypto recover with traditional markets, right? After that quarter. And then we had the big move up. Crypto has been relatively strong. And when I say crypto, I do mean Bitcoin. Altcoin season has not occurred yet. So be thankful that it hasn't occurred yet, because it probably would have been a big old washout of leverage that might have taken everything with it. But we're looking at conditions and confluences. We have a confluence. Market is hit 21 some odd percent to the downside. We're seeing signs that if this low is held, this may end up turning into a very similar situation where we see things chop around and slowly climb their way back up. So that's something that I'm watching relative to Bitcoin. Bitcoin has been strong. So to kind of the point earlier, why there is debate about kind of decoupling is that Bitcoin isn't acting like it did in 2018, right? 17 to 18. It's it's in higher low structure. It's not even threatening right now to go and take out its previous, higher low at 49K, right? Or even get to the close at 59 as it stands right now. So it's showing relative strength. And I think that's a maturing market, bigger players. And the other big factor that I know that there's people who are like, nope, it's bear market, everything's over. But I'm sorry, I would be in disbelief if we did not see an altcoin season. I just don't. I know that there's Bitcoin guys that are just like, nope, altcoin seasons are done. It's Bitcoin all the way for the rest of time. And I just don't see it that way. I think the altcoins are evolving. There's a ton of big players in the game for Ethereum, Solana, XRP. You can go down the list of there's 75 spot ETFs being proposed and mixed basket ETFs being proposed, right? That means that we have massive players accumulating the things that we hold, right? And of course, I want to see stacks on that list as well. And I venture to say it will be a spot ETF holding, not just a family office holding, right? Not just a prop shop holding for those prop shops that are getting involved in crypto. And this is where we will see those run, and we will have an alt season. I don't think that the alt season is going to be like, oh, Bitcoin's liquidity is rolling into alts, right? So if we were to look at my brain, I went from teaching Confluence stuff or illustrating what I look at for Confluence to just in straight up technical analysis and market thoughts. But I guess that's the way it goes, right? But Bitcoin dominance, I don't think that this time it's going to be liquidity flows from Bitcoin into altcoins. I think it's going to be capital inflows to altcoins directly with Bitcoin, where Bitcoin dominance will fall only because alts are making up ground versus their Bitcoin pairs. Does that make sense?
Yeah, absolutely.
Where in previous cycles, we've seen Bitcoin get sold to go into alts. So we saw liquidity rotation in the market. I don't think we're going to see that as much anymore. I think we're just going to see more liquidity pour into alts, where we'll see the Bitcoin pairs start to recover very rapidly. That will be the alt season, and Bitcoin dominance will come down, but maybe not as severely as it has in the past. But altcoins got to run.
Do you think that like all of the alts will get some love like in previous cycles, or do you think like the select few with sound fundamentals and things going for them will get love?
I think that if it's a major chain and it's got mind share and it's known and it's got good tech, it's going to run. Right? Like I know that there's a lot of dogging on Ethereum and Solana, right? But those are the two big dogs in the alt space right now, right? Like, so of course they're gonna be people from both sides that are ETH maxi or just prefer ETH, and those who prefer Solana. But at the end of the day, they're both going to do really well when we get an alt season, right? And so will everything else that actually has real tech and real investment behind it. I don't think that we're going to see in everything run for alts. I think that some alts are just going to have to take a back seat for a while because memes have entered the game in a much bigger way than many expected. And if you're trying to capitalize on that, now you have, so you actually have prop shops and financial firms that are, they're looking at this like, okay, is one of these major projects attached to a meme for mindshare, or is it not? And I don't know how that goes for them, because I know that that's what VCs are looking at, right? It's why you get the TGEs for these major networks, right? With all of this vested supply and unlocks and so on. That's why we have what we have, because they're treating it as a meme coin fund and a fundraising aspect. Because a lot of these chains, a lot of these projects, like major projects on chains, what are they doing? They're getting their seed rounds They get their angels and their seed rounds, and they do their Series A. Now they've got a lot of, equity debt, or debt, just straight up debt, or they've got equity players who need to get paid right at the end of the day. So what have they been doing? They've been running the TGE loop to fund that, pay for all of the different marketing and building that they've been doing. So they got to get something out the other side of it. And if they can latch onto the meme side of things, that's the way they've been going. I don't know how successful that's going to be in the future, right? I know that airdrop farming is great. It's fun. It's free in most cases. But we see what happens with all that supply side pressure. And once those bigger players start taking their chunk from their initial investments that they put into this technology. So, and I'm not calling out Mantra, but I'm going to call out Mantra. Oops. And look, they can blame market makers. They can blame this and that. What they did, to be quite honest, like in reality, is not abnormal in traditional market world. But if you're doing a stock buyback, for instance, it's announced beforehand. Like you actually, there's paperwork to fill out and shit. There's things to do.
Right. Just like have that happen, and then you announce a token burn.
Yeah.
Like.
So like the biggest thing here is this is going to be very hard to recover, right? Like this is going to be very hard to recover because they had thin liquidity. They're rehypothecating that. And then there is a lot of, pressure still because there's a lot of token unlocks, and you can burn as much as you want. Have fun. You're burning away, team supply or whatever it is, trying to make things right. But taking OTC deals and even vesting those guys is great. Sure. You can go and you can put money into the chart. You can you can go and provide one-sided liquidity, right? You can TWAP. There's nothing wrong with those things, but there's the matter of, are we stating this or not? Because there is legalities to these things. And like most of these projects aren't using, actual market makers. They're using air quotes market makers, otherwise known as market manipulators, right? Because real market makers actually have, like, they have to adhere to the law. They have to adhere to SEC rules and FINRA stuff, and like there's, it's CFTC rules. There's a rule for everything that you're doing when you're making markets, and there's been plenty of people who don't, the firm that you're with might get dinged. But you will end up in court, like if you do something that is violating the law. Like this is not abnormal. Sometimes you can get away with a fine if it was something that wasn't really, that big of a deal and you just fucked up. But there's consequences, and there isn't in a lot of crypto because there's a lot of market makers that aren't, registered here in the United States. They're not following SEC, FINRA, CFTC, or any of this stuff, right? They aren't. They're registered overseas as a different type of business, but they pitch as market making services and stuff like that. So who knows what they were actually using or who they were actually using? Some guy on the internet, some PFP of a puking frog is like, yeah, I'll make the market for you. Give me all your tokens, bro. Dump, right? Like, look at me. I've successfully market made 500 different tokens. Here's my portfolio of these tokens. Look, I photoshopped $300 billion worth of trading volume that I've done. Like, no, come on. Like that's the kind of people that they're using. And shout out to my puking frog. I love this frog.
Yes. Big shout out to the or those maxi.
Like realistically, we're seeing that this narrative is the TGE stuff is if it's not done right, like if you're going to do anything with tokens, and what I'd like to see become the narrative after the bigger ones like Mantra and a few others have kind of taken a spill, is if you're going to do OTC deals, that money should be going right into the liquidity pool. You generate the fees off the liquidity pools and the trading volume, because you want to encourage robust liquidity and robust trading volume, because that's what makes things survive. That's how you survive in this market. If you don't have the liquidity, you get shit like this. Boom, down, done, toast. And somebody can move your damn market with $100 million on a $5 to $10 billion freaking asset when it was at its highs. Give me a break. But if $100 million
Yeah.
is tanking it down 90%, that means you had nothing in terms of liquidity. Like,
I saw a post about somebody suing Mantra or the team from Mantra. Did you see something about that?
I wouldn't be surprised, especially if I just did an OTC deal with you and you told me something that didn't happen. Right now, I'm vested with your
like
garbage ass token.
Yeah, it was like $3.5 million that somebody invested, and they got in touch with their lawyers.
Oh, yeah.
And there's all
I'd be in touch with a lawyer. Like,
Yeah.
Hey, we just did an OTC deal, and I gave you, $1 million at a discount, at a 50% discount off. I'm in at 250, and now it's worth 53 cents. What the fuck, bro? Like that, I'd be with my lawyers as well. Like, fuck that. I don't care. It could be 250 grand I gave you OTC. I don't give a shit. I'm going after you because that's a straight up rip. Right? Like that's, and I don't care. I don't agree with Coffee. I think that it's not pumping the chart if you are buying back. It is how you're doing it. Right? And are you using a market maker to scale in and protect downside or take, because if they're not providing liquidity to both sides of the trade, then they're just putting on volume on one side to pick up tokens and resell them. Now you're in hot water. You can't be doing that. Right. Like, but I don't agree with putting, if anyone puts in, because he says it a lot. Oh, you put back into the chart, you're pumping price. Like, it depends on the nuance. Are they just buying it? Or did they tell anyone? Are they using a market maker that's registered? Yeah, right. Are they, like there's a lot of nuance there that I think gets lost with guys like him. But I think that he does a great job in his investigations. Like, that's just my one critique of that kind of stuff. But I don't know. Maybe I should do who was the Confessions of a Market Maker guy? Maybe I should start doing that.
Yeah, dude. It would be a great series.
Dude, I got some stories. I said this in one of the spaces. I watched a guy on the desk across from me get walked out of the building and then handcuffed outside and taken away. And I was like, what happened?
What did he do?
He was violating some SEC rules when he was making markets. And trust me, they don't put up with that shit. They got him like next day. Basically, he wanted to turn to the dark side and manipulate price a bit and put his market up and bait the other ones. And like, yeah, it was on a lower liquidity. I don't even want to get into it. I shouldn't say. Yeah, but it wasn't it. Yeah, because who knows where that guy is? Maybe he follows me, and I don't want to shit on him while he's following me. But hey, he served his time. Whatever. So, let's move on to a different subject. Maybe I shouldn't do a Confessions of a Market Maker thing. Let's not go there. Let's just keep it all hidden information, and we'll just blame market makers like we're a Marty Party. So the market makers are the devil.
Everybody has a part to play, dude. Come on, man.
I mean, he does.
He
plays the I know this subject inside and out, but I really don't know it. That's his part to play. And look, shout out to him. He's been right before, but when
he's been right.
Yeah, I mean, probably once or twice in his life he's been right. Yeah, I imagine he's been doing well. Look, I'll stop shitting on Marty. He's a personality, that's for sure.
Yeah.
So Federal Reserve M2, and I got to go to my economics tab because I think.
Yeah, we got Examiner. Yeah. Examiner saying, can you mention the increase of M2 money supply? Is it U.S. banks increasing the supply, or is it foreign central banks QE?
It's a combination. So global liquidity is rising.
Japan, Europe.
Yeah. And realistically, it's the same. I just wanted to get to the right ticker that I was looking for, which is United States money supply M2. Look, it's back to its highs. One of the big things is like, why? Well, we had COVID, right? We see the big increase. But look at this path that it's on. This is why we're all in crypto, right? Is because of this freaking garbage right here. It doesn't go away. Unlike MMT, which I regularly shit on because they think that you can tax it away and all of a sudden it's destroyed. No, it just changes hands. Haven't you looked at where they spend our fucking tax dollars? And this is not a shot at anybody in the audience. I'm just talking, like, I used to argue with MMT guys about Bitcoin and XRP and like everything else because they were like, no, you taxed away and that's the money going right back. It doesn't destroy anything. Now, modern monetary theory is correct in many regards, but not in terms of, oh, we're going to tax it away and now it's dollars destroyed. No, it's not. It just gets reallocated. It's taken from us and given to others. It's not even paying the debt. And even if you pay the debt, that somebody is getting that money because they are the ones that are owed that money, right? So we are on this race to the upside. Oh, we had a little bit of global liquidity. M2 money supply came down. Why did it come down? Because the Fed tightened, right? 22 into 23. And why did it go back up? It's a combination of factors, international and national. In this case, it is because they did the bank term funding program, SVB, and then what was the other bank? Shit. The New York bank starts with an S as well. And now I can't think of it, but that's, either way, they did that. They quote unquote ended that program. But it continues on. Where's the money coming from to absorb all these regional banks? Right? Like that's what's been happening behind the scenes. And it's all a little bit of Fed sorcery. And in this,
was it
Signature Bank? Thank you. It was SVB and Signature were the big ones, but it was then a cascade, right?
Mm-hmm.
A cascade because of the way that repos are set up and the way that banks are over leveraged and have very little on the asset side of the balance sheet that really is worth a shit. So I mean, it's all trash, right? Jim Cramer says Bitcoin is worthless. You can't compare it to gold. If that is the case, yes. I would shit myself if he really said that. I don't want him being bullish on Bitcoin right now. I'd like to see the resistance break. But yeah, please. Just be really, really bearish. Okay.
We need a bearish Jim Cramer for a bullish.
Keep an eye on what's his name? Bill Ackman. If Bill Ackman starts getting bullish, man, it's time to pack it in. We're done. We're cooked. The Ackman indicator on the lows, him and Jim. I mean, Ackman's like at the actual low though. Like you can be on the 1 second chart. Ackman tweets something bearish. That thing just rockets up. That's how you know he bought, right?
Immediate.
He is the best inverse. He's been the inverse before inverse Kramer became inverse Kramer, right? Like, and Ackman was the OG on socials, at least. Kramer's been around obviously forever, calling markets the wrong way for his buddies. But look, when it comes to, so the question that Examiner has is with the M2 money supply, global liquidity rising. I added on global liquidity, but I imagine that he's aware of this as well. He's pretty tapped into this stuff. Is it because of QE? Yes and no. There hasn't been too much policy out there in terms of QE. It's been a lot of soft QE, a lot of balance sheet expansion, as they like to say, which is just QE without having to make it a policy of being the buyer of last resort for bonds, and or actively buying bonds to push, rates down. In some cases, we've even seen some rate increases. This is a function of just all of the money in the system that has been printed into the system, re-entering the system with new money being printed via spending around the world, right? Because there is always going to be spending, whether it's from the US, whether it's from other countries, Japan, China, and all of those that are going to trade out into the dollar at some point. It's because of that, right? So I would agree that this is because of a combination of the factors, U.S. based and foreign based. Now, if you want to dig into like real traditional market stuff, here's I've mentioned this a few times, and it's a newer concept to some people. Some people are aware, but we're seeing, for instance, this is our investment grade corporate bonds, right? This big move down was a big sell off, right? This push interest rates higher on investment grade bonds, right? And then if we were to look at the totality of this move since the highs, so we had accumulation, so yield pushed lower. So up is down when it comes to yield. So investment grade bonds going up in terms of this ETF. This is the investment grade corporate bond ETF, CI shares. You might as well look at BlackRock if you're going to go for evaluating this stuff. But up is down in terms of yield. So yield was going down coming into September, and then started to sell off, right? So there's a trade to be had here as well. If you're not going to hold it for the higher yield that it was, right? On this move down coming into the end of summer, spring last year, bought it up, yield goes down. We saw a big dump off of 9.31% here on the ETF side of things. Now you can extrapolate that to different corporate structures, different, some sold off more than others really heavily based on what might be going on with tariffs, all that different stuff. But what happens is yield spike. We saw this same thing in our high yield corporate bonds. And, from the actual highs here, which goes all the way back to Q3 to Q4 transition last year, we saw a 6.58% drop off, which pushes yields higher. Now we have our 10-year, our 20-year, and our 30-year. There's a good gauge for this, and it's actually in another ETF by BlackRock. And this is where you could say, okay, up is down in terms of yield, and down is up in terms of yield, right? So what we saw was this is the 7 to 10 year. So it kind of captures our 10 year and a little bit over our 5 year there. So when yield is up, that means that we have sellers. So we're seeing a whole bunch of selling coming into January, and then we saw a big sell off again, right? This is called when we see this happen for the 10-year in treasuries, we got the 20-year here where we had another 9.6. But by the way, they've been selling off for a while. This is just a very sharp move. And everybody wants to discount the move that happened coming from December into January. But in this case, that was a 16.5% move. And that's before Trump even got elected or inaugurated, right? So this move down, it's about where is money flowing? Money didn't flow out of corporate bonds being sold off, yields getting pushed higher, and then buying of treasury assets, right? Because they're both moving down, which means yields are moving higher. So we had corporate bonds and treasuries getting sold off, yield gets pushed higher. What does that mean? That means that we are seeing an exit to cash. We're seeing a deleveraging in the system. Whether it's forced or not, we're seeing a deleveraging, right? I would argue that there was people that were forced out, and that's going to be primarily your hedge funds, just because they have maintenance margin that they have to maintain. It's not because they're going to get liquidated. And I think we would have read a lot about that if we did see something like that. But they got to let go. They're forced to sell some of that, get their maintenance margin under control. They're keeping their shorts, likely closing out, taking some profits, refunding, getting cash rich again, and then going back in, right? So what we saw was a dash for cash. This is temporary because that cash is, and they can sideline it for a while because they're still going to have positions open on the other side of this as their hedges have turned into longer term swings in many cases. But this is where we can then start to entertain, okay, where is that cash going to be allocated, right? We didn't see a divergence between the two. For instance, if we saw treasury yields getting sold and then we saw So that'd be your IEF, your 7 to 10 years, or you could just go by the treasury bonds over here, but it's just easier to look at the ETFs. But if we saw this getting sold, right? So treasuries getting sold, but then we saw corporate bonds getting bought. Well, then we actually have a different environment. We're seeing a rotation from treasuries into bonds. We don't typically see that, or vice versa. Corporate bonds getting sold and treasuries getting bought. So corporate bonds are moving up in terms of yield because they're getting sold, and then treasury is moving down in yield because it's getting bought, right? Then we have different scenarios that we can play out in terms of like, okay, where is the money going and why? If we're rushing over to get the yield on treasuries, it's because we're scared that the market is actually going to fall apart. If we're rushing from one side to the other on the corporate side, then we're confident in the longer term sustainability of these corporations. If we see it both come out, right? And that's where you get credit spreads and like all that kind of stuff. But if we see all of it come out like we just did, we know that it's a deleveraging because we're going to cash. And that actually makes me think that we're going to recover much better than people think. But it's still dependent on a lot of factors that we need to see coming into next month. Bitcoin showing relative strength, the possible higher low setup here on traditional markets. We got to monitor very closely. How does that play out through the rest of this month and into May when we're going to get real hard numbers? We're going to get GDP numbers on the 30th of this month. And then we're rolling right into, all of the major, obviously this week and the next week, and the end of the month, we got all the different economic data regarding jobs. And then we get our GDP, and then we start getting all of the rest of the economic data for various things that are going to tell us where we are in terms of, is this a recession? Are we seeing inflation based on the tariffs that have been implemented? Are we seeing deflation in other areas? Are we growing or shrinking? Are we going into a recession or are we not? Because there is no definitive answer right now. It is a mixed signal where we're seeing deflation in some areas, we're seeing inflation in others, but we haven't seen the effects of the tariffs yet. And that could even be a fluid situation throughout the rest of this quarter as deals get done, as new players kind of want to come to the table, as others want to slap more tariffs on, right? We don't know. And I think it lasts the whole quarter in terms of narrative, but we're probably going to see that our edge is going to be in looking at what's happening with bonds. Where are we keeping cash sidelined, or are they coming back in? You can see that treasuries are getting bought up a little bit. We'll know who the buyers are, end of day, end of week, that kind of thing. We'll have a clearer picture on who some of those buyers are, and definitely the Fed reporting and Fred reporting. But there's that, and then of course there's traditional markets like your SPX, your SPY that we were just looking at. The possibility of higher lows. What is the market telling us? If it wants to put in a higher low and head up, we're likely going to see corporate bonds getting bought back again, treasuries getting bought back again. Some of that cash that came out of the system being redeployed back into it in stages while the market figures out, hey, what's the lay of the land? Are we uncomfortable or comfortable with what's happening? Who do we have to adjust to invest in for the future in the next couple of quarters to couple of years, right? And that's going to be very important when evaluating what's happening in crypto markets. And I think Bitcoin is going to be a very clear indicator on its next big actual rip up, not just on the daily, but on the weekly. That's where rubber hits the road. Where does this end? Where does this high come in? That's what we need to determine from here.
Yeah, I think that we got the right guy watching the charts for us at all times. I know that much. How many screens do you have on your setup now, Landy? It's up to like 10 now, isn't it?
Where I'm sitting with this microphone, I have 4 screens, and then I have a little screen that I move things to. It's like a I guess it's like a mobile screen that I just kind of I take with me when I have my laptop.
Yeah, you go get a drink in
Yeah.
the kitchen, and like you got the screen. You're never really
No,
away
never.
from the screen.
Never.
Okay.
It's like it's got the wireless link to the desktop over here, but this
Let's
is
go.
yeah, no, I've got a lot of screens. This is just this room with I've got like 6 screens in the other
Just
one.
this room.
Yeah. No, man, I've got a complete battle station in the other room. But my
Oh, dude, you get into the trenches. That's the trenches, like
yeah,
over
no,
there.
like
And in the room right here is the like, hey, you know, I'll do my warm up routine, and then like once you crack the knuckles, you head over to the other room
dude,
and get into the battle
it
station.
it
I
is
dig
one of
it.
those situations where if my wife knows if I go in that room, don't bother me. There's some serious trading going on. Like I'm evaluating something that we're getting into position kind of thing, which
Hashtag in
yeah,
the zone.
yeah, pretty much, man. It's just like, you know, locked in. It's that meme of the dude sitting back and then he's sitting forward. Like you got to lock in, bro.
Oh yeah, just in the chair.
Yep,
Oh,
yep.
I get it.
Yeah,
Oh,
brother.
dude. So I was looking on ETH BTC. I was looking at that a little bit on the weekly chart. What are you seeing on the weekly for ETH BTC?
ETH BTC has been interesting.
Yeah.
I don't know who I want to grab for this. You know, I'm going to go with Coinbase because this is where the institutions are buying and holding. This is we'll call it a big downtrend. You know, just a big downtrend here. This is obviously not great for people who hold ETH and are looking for it to appreciate faster than Bitcoin, because since 2022 it has not even remotely tried to keep up with Bitcoin. But at some point it will outperform Bitcoin. We've seen spots for a week here, a week there, trying to find some footing around this low for ETH BTC, and it just could not hold it once it started to break down, lower high, and then boom, down, right? But we're starting to get into an area where I think I think that my take is that ETH is in a giant consolidation. I don't think it's going to resolve that consolidation to the downside either in terms of its macro structure. That doesn't mean that it doesn't continue to plumb lows, but the big thing here is we need to see reaccumulation for ETH on the weeklies and the monthlies. So for ETH BTC in particular, because ETH is, moving up when Bitcoin moves up, but it's still struggling. And the same even now with Solana too, although Solana is in a little bit stronger position in terms of support. It's also newer. And it's got the meme coin narrative still there, right? So it's still putting on a lot of volume. A lot of people are very excited about it. ETH is basically a dinosaur like Bitcoin at this point. And I'm not talking about network technology. I'm talking about in terms of the OG in the room. Ethereum's not going anywhere, and it's getting to a key level on ETH BTC where I would expect it to bounce fairly soon. It's got spot ETFs. It's got a bunch of massive players in the game that are invested in ETH and are going to continue investing in ETH. The big narrative is like, oh, well, it's got all the TVL. Yeah, but that TVL from those stables can go anywhere. And when that's often what we're seeing is the relationship with those stables, USDT and USDC, flowing all over the place. It's great that it's on Ethereum and it's Ethereum based for that TVL, but in reality, we're seeing that flow to layer 2s on ETH, right? And that's where it's about who's going to, I think what is going to pick up prices. One, it just makes sense as an investment. I'm not sure about the RISC-V move, because if you're running a full node, there is no RISC-V hardware that can replace full nodes right now. So it needs to be emulated. What does the overhead look like for emulation of RISC-V and a move like that versus, the benefit of moving that way? Does it really increase the TPS, or does the overhead cause issues? because then you're running RISC-V with backwards compatibility for EVM to support all of your layer 2s while they move over, and then you're loading the RISC-V's portion. What do the numbers kind of break down to for cost benefit analysis in terms of CPU overhead and just manpower to readjust things, right? Where do they find consensus, that kind of stuff? I think that it's the perfect time for this stuff to get rolling.
I saw a take. Somebody, I can't remember who it was, said that Ethereum has been scaling horizontally for the longest time, and Sol is scaling vertically.
I would say that's a good take. But I mean, that's also age, right? Ethereum has been around a very long time. The EVM architecture has been around for a long time. Solana doesn't have a lot of layer 2s, but there's layer 2s coming, right? Like there's going to be specialization layers that are going to be built on Solana. Solana's got a really good DeFi ecosystem, but it's pretty much wholly ignored because everybody's degenning and playing the casino side, right? Ethereum is kind of where DeFi got started, and we saw the DeFi run. And we saw the NFTs and the meme coins pop up there, and are they losing in that narrative? Yeah, I'd argue yeah, and they're fighting to get it back. But in reality, when looking at price, I think that Ethereum's a steal. Below $2,000, anything below $2,000, if you're accumulating, I think in the long term is a steal. Could I be wrong? Abso-freaking-lutely. But I'm willing to be wrong on this because I put my money in it. I
was looking at the chart and I thought I saw a lower low on RSI and like maybe a higher low being set on price action on ETH/BTC
for Ethereum.
I don't know. I was just
I'm not saying that on ETH/BTC.
No.
ETH/BTC is just in a straight up downtrend. This is not what folks and not what I want to see for Ethereum. I'm a Bitcoin first guy, obviously, right? Bitcoin is the majority of my portfolio, but I hold ETH, I hold Solana, I hold Stacks, I hold countless other, even though I hold XRP, even though they hate me. They hate my guts and they try to take me down at every turn, even though I've been in since before some of them I feel like were born. But the big thing here is I think that ETH is in a bottoming area right now. What you're seeing is the RSI show relative strength on this downtrend, but we've seen this picture before, right? That's where it needs to be Confluence, right? So we need to see RSI turn. We need to see Stoke momentum turn, which we're getting that. But that's only one part. If we look here, we need to see lows set, right? We need to see this low set. It's not in danger of setting a low right now, that's for sure. We need to see a low set, in this case, above this close open high right here at 0.018, almost 0.019, right? Because we need to see this lower high. That's progress, right? That would be progress. Set the low and then take out that lower high, and now you have a trend break. But then it's got to hold it, right? And that's where things get interesting again, right? That's where those signals that you're talking about in terms of RSI and then momentum and everything else are valuable, right?
So where would you start first? You start with trend first?
Trend, because you're going to get counter trend signals like we have momentum up. We've got a bunch of bullish divergences on the daily. I mean, shit, we can go to the weekly. Let's look at the weekly. This is just about the deepest you can get without getting into critical zone for RSI on the weekly. We have not seen this, at least on a Coinbase chart. We can find older charts. We haven't seen this in, what feels like a decade, right? For this low level of RSI on a weekly. Which also means that it has to build bullish divergence on the weekly, and it's not in danger of doing that anytime soon. right? Bullish divergence on the weekly means it's going to have to pop up aggressively and find bullish divergence from some of these other areas over here, or find it relative to this most recent area, which means lower lows, which would not be good for Ethereum. But we also have, we have momentum still down in the weekly. Could it threaten turn? Could there be divergences here for momentum? You bet your ass there would be, based on this last weekly low being all the way up here, right? So can it throw divergences from there? Not in danger of doing it on RSI, maybe momentum, but it doesn't do much. But a small move up in ETH BTC is going to be a big move up in USD, right? And that's going to be a big move that could get people excited and maybe then start to build again, right? For the weekly here on Ethereum USD, we tagged right around this important low over here from building out of the bear market, building that structure. We had a higher low here to higher high at 2100 and started to build our way up back to the 4K to 40, basically 4,400. But we saw this area as support get lost, and I'm bearish below there, right? That's things change when I start seeing daily closes back above 2100 and then subsequently weekly closes back above 23. That starts to look good. What is that going to mean? If ETH BTC is still falling, the rest of the market is ripping, or at least Bitcoin is ripping and leaving Ethereum behind in that case, right? But I think that there's a good chance from the USD pair side of things, if we set a low here, that there is a potential bottoming that could start to form on ETH BTC, but it's going to take a while. And look, all of the noise surrounding it be damned. I don't care. We had a technical breakdown on Solana as well, but it's lucky it had a level right there, intra-week level that it could hang on to, swing below 98 at 95, and then pop back up to resistance as we saw earlier today. It's already getting its momentum shift. If it closes here, it's looking good, right? But we need to see divergences form from this range now and not this most recent low, because if we're going to see bullish divergences form from this most recent low, that implies lower lows, because that's the only way you're going to get bullish divergence to form on the weekly. Daily looks pretty good, tagging resistance, but doesn't do much for me. It's the same with Bitcoin. It doesn't do much for me. It's in the zone of resistance. Solana's in an area of resistance. I want to see that break. Local resistances, ETH is trying to climb above its local, but it's still inside of a weekly resistance at 1790 to 1800.
Is there some sort of chart for BTC Fi, like all L2s and Bitcoin DeFi?
It's going to be DeFi Llama. If you're me, I know that they don't have the most up-to-date information on things, but that would be kind of where I'm at with DeFi stuff. If I'm looking at DeFi Llama, there's not too much to DeFi Llama. Let's go ahead and share this one out. So let me share you this.
My timer's going off and telling me, hey, it's 3:00, and I'm like, forget about it.
So if we're looking at, here's what I do. If you want to go to chains.
Hold on, let me get this thing up real quick. All right, here we go.
So DeFi Llama is fairly accurate. But then there's a lot of things that aren't picked up by DeFi Llama. Shout out to Stacks, because I don't even know if SBTC has been picked up by them yet in terms of the TVL there. But what we're seeing is, who are the top dogs in terms of DeFi TVL? It's Ethereum, it's Solana. Then you've got your BSC, Tron, and of course, Bitcoin TVL at 3.7 billion. So, then you start getting down into derivatives of Ethereum, essentially, and it's layer twos for Base, Barachain, Arbitrum, before you get to a new chain, and Sui. And then you get to Avalanche and Aptos, Sonic, Polygon, which is, I still think of as a derivative, but isn't Polygon and Sonic the same thing now? I don't remember. Somebody would have to correct me on that. I get so confused when looking at some of this stuff. But if you look at DeFi TVL, Ethereum has a robust ecosystem for DeFi TVL. It's not, I don't see a sea change in that being overtaken because of the players that are invested in it. But that also means that Solana, as an up and comer, still has a lot that it can eat, right? But when Ethereum starts to move, oh yes, thank you. Sonic was previous Phantom. Yeah, it wouldn't make sense that it was Polygon because Polygon hasn't gone anywhere. Phantom, FTM, I remember. Oh God, Phantom, what a shit show that was.
Yeah, I actually did some Phantom
Did
DeFi
you?
before I even experimented with Stacks DeFi. I was trying to figure out how to use MetaMask and do some Phantom on I think it was called Phantom Swap or something like that, and it's just or Phantom of the Opera, some random DeFi.
Yeah,
before I even knew
about right.
Down. Yeah.
Now, when we look at Ethereum TVL for the DeFi ecosystems, if you look at the DEX volume, this is the big thing that I've been keeping a close eye on. And I don't know how accurate some of this information is for DeFi Llama in terms of DEXs. We could always dig through, but I don't really spend a lot of time on it because it already got into some of my initial buy zones, right? So same for Solana, and if they were to even drop those zones, I'm still just bigger lot sizes I'm aping in, right, as price heads down. But we've got I like seeing stable market coin cap go down. That means we're deploying back in. But
Yes.
we see that it has a really robust ecosystem, right? We have in the same. I know that it's far less TVL for Solana and the others, but these are still healthy numbers. I'm not seeing anything that stands out that is bad. And the only thing that I would say is, if we're looking at bridge TVL, our bridge TVL number is very, very high for Ethereum and Tron. And that's both incoming and outgoing. So that's inflow and outflow in terms of bridge total value locked. If we're looking at stables, those are things to lean on, but we're leaning on inter-ecosystem transfers, right, to try and gauge things. And I think that the majority of the money is going to come from outside into the main tokens, and then it will work its way to the DeFi from the bigger players, right? It's about where does retail go next. And I think if Ethereum starts to leg up and let's say Ethereum Sol pair starts to rip, Sol is now maybe taking some time to consolidate, and Ethereum starts to rip to the upside, and Sol kind of maybe goes sideways, takes a backseat for a little while. I think that it's going to be a constant one goes and then the other, and then one goes and then the other, and then we get the all pump, and that's going to be near the end, right? And that's where we will see not a roll necessarily from Bitcoin in terms of why dominance is going down, but a catch up from altcoins for the actual alt season I think that we're going to get. But we need to see healthy structure being built. If you were going to take a look at Bitcoin chains, by the way, Bitcoin side chains, one of the big things you'll see here is Cordell dominating in this area now. And in terms of DeFi TVL, yes, I know Babylon isn't on here. They also just bridged to Sui or Sui. Sorry for those that they get on my case, man. They don't like if I say it wrong. But we have 90.5, it's not picking up what's going on for stacks in terms of TVL, because it's not picking up SBTC on this list here, right? So
it needs to, they need a little update. DeFi Llama.
Maybe it's in a different area. I don't know, right? I'm not quite sure. Right. But stacks is quite a bit higher on this list. What are we at? We're at 3,000 SBTC
6 or
for stacks.
At least actually
it should be a little bit more. It might be a little bit over, but I know that 3,000 What are we at? We're at like 91 and a half, we'll call it. Yeah, 91. Yeah, so we're at 274 million in actual TVL because of that. So you add that to the DeFi ecosystem. So plus 90 point, we just call it 90 mil. So yeah, we're at like 275 mil for stacks. So that would put it at right above Bob, right in between Bob and BitLayer, in terms of DeFi ecosystems for Bitcoin. So it's basically probably spot number 4, and there might be other protocols that aren't being picked up by those by DeFi Llama for those chains as well. So somewhere I would put stacks in terms of DeFi ecosystems and TVL somewhere around the 4 to 5 category, depending on what's being picked up and what's not. The big thing here is you'll notice on a lot of Bitcoin stuff, fees generated are almost always nothing. And I'm not quite sure where it's picking, like 24-hour DEX volume, it doesn't pick up. So there's some issues in terms of sourcing that information from Bitcoin layers because they're so new, right? They're relatively new.
Right. Yeah.
Even for as old as Stacks is, it's been being built the whole time. You've got Rootstock been being built, and all of these things the OGs have been building for a long time. And then you got a lot of newer players, and how to aggregate that data. And the aggregation of that data is going to take a little while, but this is what's going to pop next. Bitcoin sidechains and Bitcoin DeFi is the next massive narrative. I can tell you that your quote unquote family offices or mom and pops or whatever you want to say, including and up to your actual financial firms, otherwise known as prop shops, are very interested in Bitcoin DeFi. It's one of the reasons why we have the TVL that we're getting. It's not just, and it depends, you can go network by network, but in terms of the actual TVL that we're seeing in the Bitcoin ecosystems, it's interesting to say the least. And then you've got proof of stake, basically protocols here.
Check out Stacks back at 80 cents.
Hey, I shared this yesterday in our cool guys chat for Stack.
Yeah, our cool guys. I know the cool guys chat.
And I was looking at this spike to resistance right here, and I was like, hey, this is the green line. This is our green line.
Where at?
And then
are you sharing?
Oh shit. Share this tab instead.
We were talking about TVL. So yeah, this cool guy chart. Yeah. I know what you're
we hit my downside area of interest that I'd been sharing with you guys for quite some time, for a while, that's for sure. Remember when it was trying to hold on here and went whoop? Hey, hey guys,
that was fun.
But closed right back on it and then decided to reject it and come down anyway, fill out the range, fail, and then fill out the next range. Well, we were poking at this when I shared that at 72 cents or whatever, 72 and a half cents. I was like, hey, this is the green line that we want to see. And we're starting to see that. Hopefully we get some follow through and don't just swing and fail, because now the zone that we're playing in is between essentially 76, almost 77 cents to 88 to 89 cents. You could take 90, by the way, for this spike over here if you're on lower term timeframes, 90 to 91, because then we're playing with this. And then the major area is going to be that $1 to $1.03, $1.04 area. Looks good. I like the pump on Stacks. I was a bidder, obviously. I've been bidding it because it hit my key zones. And while I was trading it on some centralized exchanges, I became a heavy bidder under the 72 cent region. I think we had this conversation on a Spaces event as well, that under 72 cents, I am going ape shit on my bids. And I'd like to say I would love to hope that I played some type of a role in trying to set this low because
Let's
because
go, dude. Landy bidding
I was
hard. Let's go. Set the
I
low,
was
Landy.
bidding like a freaking madman down here. Yeah, I was let's just say there was some changes in the portfolio as it related to stacks that allowed me to bid.
Let's go. You playing with like perp decks, earning that 5% APY paid out weekly for longing Bitcoin with USDH?
I am playing a little bit. I'm playing a little bit. We're not at the I'm aping it yet, but I'm playing with it. I'm pushing I'm experimenting, let's say. And this is the way that I approach every perp dex. It's the way I approach every centralized exchange. And it's nothing to do. I love the guys at Valar, obviously, you know.
Yeah.
And then obviously I have I'm an affiliate with Hermetica and Jacob and Tim
Right.
over there. And you know, I think that they're doing amazing things. And Stacks has a perp dex that no one is really even paying attention to. And when they really realize what's going on, it's over, man. It's over.
Just like that.
Fast transactions.
You know, and
look, hey, I was talking to the Caspa guys yesterday. I told them they need to get it. If they want to build a better Lightning, they better talk to Stacks.
yeah, I was in there whenever you're talking with the Kaz guys, man. They were talking about integrations with BTC, and then you're like, well, just bridge. Like,
Yeah. Well, here's the thing is you want to, if you're going to do anything on another network, you ain't going to get Bitcoiners if they got a peg in and it's a
yes.
and it's a centralized single point of failure peg, right? So why don't you use one instead of recreating and trying to fight for TVL? Make use of one that's already available, like SBTC. You can build your Lightning channels on it and whatever your better version of Lightning is going to be, and you can utilize that. And then it's all, you don't have to worry about the settlement because it's already handled by Stacks on layer one. And you don't have to worry about any of the garbage surrounding it. You can just build the tech that makes it go, and you can integrate with Stacks. You all get volume, and you get happy Stacksers that are also over here hanging with you. Like and this is the way that all of Bitcoin is going to go, by the way. It's going to be Stacks talking to Babylon. It's going to be Stacks talking to Caspa guys who aren't even really Bitcoin. They're Caspa, right? But they want to be involved with Bitcoin. They want to get Bitcoiners over there.
Except for this one guy that we had in the warm-up space this morning. He was just a troll, but he came through and he was like, he was a Caspa maxi and he was trolling Bitcoiners. I'd never experienced that. Got our first troll on the warm-up
That's
space
interesting.
this morning.
So look, I made it known. There are miners that support Caspa, and they're Bitcoin miners. So maybe don't shit where you eat, kind of a thing. Is the same thing that I've told XRPers. Remember, you only have 211 freaking validators, right? Right. So in terms of like just in generally speaking, yes, there is hierarchy there and so on and so forth. But like, don't shit where you eat, because if you want to eat with Bitcoiners, then you got to come to the table and you got to be respectful, because we just will take our all that TVL that we're trying to unlock. We'll just take it somewhere else. Right. And
yeah, see you later.
What I was trying to illustrate when I was on that space, and they were very kind. It was a great conversation, a wonderful space.
Yeah, they were.
Big shout out to those guys for having me up and even extending the offer for me to come on there as, a badged up Stacks and Bitcoin first guy. That's when I look at Caspa, obviously I know a lot of Bitcoin miners who are supporting Caspa as well, but they're not supporting it because they think that Caspa is going to be the next Bitcoin, or that narrative, as I described yesterday, is over. Ethereum was going to be the next Bitcoin. XRP was going to be the next Bitcoin. XYZ network, BNB was going to be the next Bitcoin. Everything was going to be the next Bitcoin for years and years and years up until 2021, right? When Bitcoin said, you know what, I'm going to go into a full-blown bear market. I'm going to fail at 48,240 and just tank. And by the way, you're going to get wrecked by every major institutional player that you had supposedly some back, all these big, Celsius and BlockFi's. And oh, by the way, the biggest exchange as well is also going to bend you over sideways. When all of that happened and everything dumped hellaciously, and Bitcoin did not hit all those targets that all of the Bitcoin bears wanted to see, and then started to leg up from the lows and consolidate.
They were calling 10K, Landy, like sub 10K
Yeah,
prices.
I know.
Like,
it was, but while those were technical possibilities, they also at the same time weren't. That's just one of the reasons why I was calling for between $15,000 and $16,000. Bitcoin just happened to split the difference there and hit 15.5 on spot. And by the way, that was not like, oh, I'm such a great analyst, look at me. It was like right there in front of us. It was not a hard call to make between $15,000 and $16,000. It was literally the next logical area of interest before getting to our $10,000 to $12,000 calls, before getting to our $8,000 to $5,000, before getting back to, remember $3,000? Looking at you, Profit Blue, freaking idiot, who then had to go and scam on Telegram to freaking make their money back. I don't even know who runs that account, but fuck them. I mean, don't butt fuck them, but fuck them. Excuse my language.
I got you. Got a comment in
there. There's a pause in there, and look,
Pause.
I think that everybody in general should be looking to the real catalyst in this market, and that is Kanye having relations with his cousin. That was clearly the bull signal. We're back on, even traditional markets trying to put in higher lows at this point because they read Kanye's post, they're like, "Yep, bullish."
Bottom signal.
Definitely a bottom signal if I've ever seen one.
Yeah.
Is it a bottom signal or top signal? I don't really know. That's a pretty interesting.
I don't know. I don't want to get too far into details there, Yay. But
you didn't have to tell us all that, but I guess we're happy you did. Markets responded well, maybe when you release your new song, we'll find out what markets think of it, right? And nothing for nothing, I do not give two shits about what was posted. It is bizarre, though, that's for sure.
Very, dude, out there.
But I mean, that's the real signal. We've got Kramer, we've got Bill Ackman, and we got Kanye. That's all we need to watch. Screw all the analysis. Is Ackman is Ackman bearish and Kramer bearish at the same time? Probably a low coming in. Is
what indicator? When Ye, Kramer,
Ackman, if Ye is posting some crazy shit, probably back in a bull, a little bit of a bull edge here. Oh God.
Is this the new way we look for Confluence?
Yes,
now?
This is our social metrics now. This is somebody create the indicator for Tradingview, please. Oh my God. Good. I mean, it was kind of bizarre because he posted that and the market started to pump. It's like, weird.
Out of nowhere. Just nobody asked you that, Kanye, and everybody was just okay. He sold.
We're just voluntarily airing out our demons, apparently. Oh man.
He needed a dude. So big shout out to Kanye pumping the bags.
He was definitely pumping some bags, that's for sure. It's there's too many jokes there. I don't know if he was emptying or pumping those bags, not really sure, but I guess we'll find out.
Oh man, it's too good. You can't make it up. But maybe it's is it unhinged intern? Like, I don't know.
There's been speculation that it was Bark just tweeting some nonsense from his account. Just like, it's so great.
That's so
I don't
funny,
know, man.
Dude. That's hilarious. I love whenever these little like the side stories start happening.
So I've got I'm gonna leave you with this as we draw in towards 12:30 my time. What is it, 3:30 your time?
Yeah, about.
If you want to move us over or take us off the screen for a real quick moment here, this chart is a pretty important one.
Like this. Did we want one of these or did we want one of these?
There we go.
Like one of those.
And we can see the full chart real quick here. This is
Gotcha.
this is Bitcoin exchange reserves, right? You and I think, have talked about this before. Me and Peace have definitely talked about this.
Yeah.
Exchange reserves increasing throughout Bitcoin's life cycle, constant uptrend, right? So a little bit sideways, some deviations, but pretty much an uptrend. We saw the first sustained downtrend post March crash. This was a character change in terms of exchange reserves. So this is the amount of coins that exchanges had in reserves, right? And then we saw big outflows. We saw the uptrend resume into the in terms of exchange reserves, into the actual highs of 2021, the first set of highs before $69,000. And then you'll notice that it started to go sideways, popped up into the bear market, popped up a little bit again, and then went massively down on the lows. Went sideways and up for a little while, consolidating, and then boom, down with the ETFs. This is a massive, massive, massive change in terms of exchange reserves. What does this tell us? This tells us all of the things that we already know are very true, and that is that bigger players are now involved. It's a free market. We always knew they were going to be coming for our coins. But exchange reserves, I think, will continue in a downtrend until it finds like some stabilized, level for a while, and then it will continue that downtrend forevermore as bigger players, people in crypto and retail start accumulating coins, because we have now, the emissions rate is slowing. And then we have increased demand and interest from around the world in every sector, right? From retail to government. And of course, that encapsulates states here in the United States, and of course the bigger players, like our actual federal government. And then you incorporate all of the different corporations, the asset under managers, and family offices, and prop shops, and funds, and and then retail on top of that. And you can see that this is a path that Bitcoin is on that could lead to callback all the way to a potential decoupling, or an event where Bitcoin is going to change character as we see it versus traditional markets. This is where we're going to see it stem from. And this is something that we want to look for in all of our coins, as that will increase the value. The less there is on exchanges means the more stable pairs there are, means price goes up. We see a big old leg down in terms of exchange reserves today, and you notice what price did? Right back on to the upside. So that's what I'm going to leave you with for today. You can bring us back if you like.
Let's go.
Yeah, and a big shout out to Peace for opening this up. I was a little late. I do apologize to Peace. Much love to you, brother. And GP, I'm so happy to see you, man. It's been a while. I haven't been able to get into the night show.
I know, man. I know you've been busy and like legging it, and then taking care of IRL stuff, and then like busy in 1,000 places all at once, as you always are. So yeah, dude, I'm so glad I got to spend some time and kicking it with you and talking about what's going on. I always love spending time with Landy.
Hey, look, dude, it's one of those situations where even when I was coming in, all of a sudden my frog's just on the screen, and I have to run and do something else and leave my frog in. Hey, yo, rep for me, frog. But yeah, much love to you, brother. I really appreciate these conversations. And look, man, I'm thrilled to see what you guys are doing. Like, it's awesome. It really is. It's something that I know, that I knew that you guys would be successful with, and that I am 100% on board with, and want to see you guys continue to succeed, and the doors are going to continue to open. And I'm really, really proud of you guys too, because you guys have been hustling.
Thanks, dude. Thanks, dude. We got legs and we can run for days. So this is what we're doing, and deorganized is where it's at. So if you're not following deorganized, follow deorganized at deorganized BTC, so you can stay into the know. Tune in on Tuesdays for TA with Landy. Do you have it? What set time is this? This is the first time that I've been on this one. Is it always at 2? Is it always at 2?
I keep forgetting. It's at 1, 1 Eastern, 10 Pacific is when it's supposed to start. But Peace and I have had to move things around because either he's had stuff going on or I've had stuff going on. Today we were a little late, but that's just kind of how things go, and that's just, we're always ready to do a show, right? There's always something to talk about. Whether it's with you, whether it's with Peace, or any of the other guests that you guys bring on. You guys have been killing it. We'll be back here next Tuesday. We'll call it 10 a.m. Pacific, 10 p.m. or 1 p.m. Eastern. But you should, if you're watching this and you don't know who Peace Love Music are, who GPSC is here, who's on your screen with my silly frog to the left of him at this point. Make sure you're following them. These guys do great work. It's not just within the Stacks ecosystem. It's with guys like myself who do TA. These guys obviously are tied to the Stacks ecosystem, but it spans AI, Stacks, artwork, news, politics. It's everything. It's everything. And
it's what you envision a decentralized media company to be,
exactly,
covering news to alpha and it all, and entertainment. We have a little laugh and a good time with the guys. So you guys tune into the night show at 7 p.m. It is called DeOrganized Nightly, and it is hosted by chads that come on and discuss the alpha. So thank you, Landy. I appreciate the shit out of you, brother. I hope that you have a very blessed rest of your day, bro.
Much love, GP. And thank you to the audience out there. I see that the people have been piling in, and not too many chatting, but I see y'all in there. So appreciate you guys. Appreciate the hell out of you, GP. And of course, much love to you, and peace. And we'll catch you all on the next episode. This was a good one. I like kind of going longer. It's nice.
Yeah, it was nice. Later on, dude.
Take care.